So again, this is a paper trading account, meaning everything here is real except for the money. And this is where you want to learn. This is where you want to make your mistakes. This is where you want to figure things out. Did I do this right? You know, am I comfortable with that? That is where you want to figure it out here, okay? And this is where we encourage people to start off. But we're going to go over and make some sample trades, okay? So we're going to take a look at our watch list, and this is my Interactive Brokers app. It's at the top. It says simulated trading. This is just a paper trading account, like I said. Everything is real except for the money, okay? Now, we don't want to use real money until we know exactly what we're doing. We have a high degree of comfort, okay? So let's take a look at our watch list. Let's see what the market's doing today. The markets are up a little bit today. Some stuff is down. So let's make some trades. We can see Facebook is down here a bit. Microsoft is down. Tesla's down a little bit. Everything else looks like it's kind of up today. So let's take a look at it. Let's make a trade though. We know we love Apple a lot. So Apple is a company that we think, you know, we'd love to get more of, and we'd be happy to own it. So Apple's currently trading at $161.61. You can see it's down a little bit for the day, about 2.5%. And the reason it's down is because there was a unnamed source saying that iPhone 13 demand may be slightly lower than anticipated. Okay, that's great. Obviously, we don't like to see that, but again, we believe in the long-term viability of this company. We believe a year from now, 2 years from now, 3 years from now, it's going to be in a better spot than it is today, okay? In terms of how much money the company makes, which ultimately should get rewarded by the stock price. Now, it's at 161.32. Now, if I believe it's going to be worth a lot more in the future, say a year from now, 2 years from now, 3 years from now, I'm pretty happy with this price if I believe it's going to be worth more. So the first step we always do here at Theta is we analyze the quality of the underlying stock in which we are investing. In this case, it's Apple. We'll thoroughly investigate the company, its financial statements. We use their products and services. As you can see, I'm using AirPods. I've got an iPhone, MacBook, iPad. We immerse ourselves in the environment, in the actual ecosystem, okay? So we understand these companies well. And as a result, you know, we think Apple will be worth more in the future. Now, that's not stock advice, it's not meant to be stock advice, just simply showing you our own internal process, okay? We think Apple will be worth more in the future. Okay, great. Now, we can buy Apple today at 161.15, okay? Or what we can do is we can say, you know what? Why don't we just agree to buy Apple? So we're going to go here and look at our options chain. So instead of actually buying Apple for $161, I'm going to agree to buy Apple and get paid for it, okay? So I'm going to take a look at my chart here. And I say to myself, you know, I'm pretty comfortable around that. I'm pretty comfortable on 160, actually. Pretty close to where it is now because we're going into a seasonally strong period of time. And I'm pretty happy to own some more Apple, okay? So instead of buying it for 161, I'm going to agree to buy it for 160, excuse me, okay? Now you can see here, for a month, the markets are paying me $5 a share, okay? That works out to a little bit more than a 3% return for a little bit less than 30 days. Now, just think about this logically. I'm getting paid over 3% for less than a month simply for agreeing to buy Apple for $160. It's at $161 today. Now, if Apple goes and stays below $160, I'll have to buy it, in which case I'm fine with that. But I keep the $5 a share no matter what happens. Now, between now and December 31st, if Apple stays above $160, I don't have to worry about buying, and I still keep the $5. I keep the $5 a share no matter what happens. And you can see the option value, you can see it changes very frequently, quite frequently. So we're going to go ahead and do a trade here, and we're going to agree to buy 100 shares of Apple, which means it is one contract. One contract represents 100 shares. So we're going to agree to buy 100 shares of Apple, okay? So I'm going to put a market order in. Normally, I wouldn't do this. I would put a limit order in. But since this is a fake trading account or paper trading account, a market order is fine, okay? So again, think of this logically. I'm getting paid $5 a share simply for agreeing to buy a company, in this case, Apple, that I would have been happy to buy for 161 anyways today. Why? Because I think it'll be worth more in the future. And that's over a 3% return for the month, okay? So it looks like we went and we did that trade. Okay, great. And now we're going to take a look at the rest of our universe. Let's see what's doing what. Okay, we can see Facebook's down a little bit today. So, and again, Facebook's a company we love. It's been out of favor of late ever since that whistleblower came out and talked about Facebook, but it doesn't change the amount of money the company makes. The company makes a tremendous amount of money. And again, we think it'll be worth more in the future because we've done our research, our homework on this company. That's our analysis. Right? And you can actually see the analysis of some of these companies in the app itself. So if you, not that we take this for any sort of credibility, but you can see what other analysts on Wall Street think of this stock. You can see, like this gentleman here a few days ago, he put a 1-year price target of $445 on this. Now, we don't rely upon this research. We like to do our own internal research, but the stock is currently trading at $309. And again, we think it'll be worth more in the future, okay? So we're going to go ahead and agree to buy this stock. And let's see what price. Now, this is below the 200-day moving average. So normally, I wouldn't do this. This is something that we do discuss in the course. But I'm going to go ahead and just do a trade just for the sake of showing a trade. And it's going to be very close to the current price it's trading at, just to show you what sort of return I can get just for agreeing to buy the stock, okay? So instead of buying it for $309.80, as you can see, it's in the corner, I'm going to simply agree to buy it for $305, okay, as you can see here. So on or before December 31st, I'm agreeing to buy Facebook for $305. Now, the market is paying me over $11 a share. It's paying about $11.30 a share. That's about a 3.5% return simply for agreeing to buy Facebook at roughly a $5 discount. For me, that's a win-win situation. I'm more than happy to do this. Again, why? Because I want to own Facebook. I think it'll be worth more in the future. So if you're going to pay me $11.50 a share just to agree to buy it, absolutely, I'll take that. Now, as long as I'm not leveraging or borrowing money here, my worst case scenario is that I own Facebook for $305 a share. I'm okay with that. But I get to keep that $11.55 or roughly whatever it is. I get to keep that no matter what happens, okay? So I'm going to go ahead and agree to buy 100 shares of Facebook. And I'm going to do a market order on this. And away we go. And there it is, order filled, okay? So let's go back to our main screen. And let's take a look at our orders for the day. Okay, we can see here we already made 2 trades. We can see we did this Apple trade here, and we got $495 US, okay? That is how much we got paid simply for agreeing to buy 100 shares of Apple. Okay, in this Facebook trade, we got paid $1,150 US simply for agreeing to buy Facebook. These are 2 companies that we would have bought anyways at their current prices today, okay? Now, we go down the list and we look at some more stocks and see what else we can do. But let's see what else we can do here. So what else would we look? Let's take a look at Tesla. Perfect, okay? Tesla's down a little bit for the day. Nothing major, but it's down slightly for the day, okay? So I know, and again, Tesla's an expensive stock. So there are cheaper price stocks that you can do this on. I'm just trying to show you that you can make a tremendous amount of money simply for agreeing to buy stock you'd be buying anyways, okay? So in this particular example, Tesla, okay? Take a look at the chart here. And I say to myself, I'm happy anywhere around, I'd be happy around the 1090 area, but let's go a little bit less than 1090. Let's go about 1080, okay? And we're going to go to December 31st, okay? We're going to do 1080. Take a look at this, guys, and tell me this isn't crazy. Now, again, if I think Tesla is going to be worth a lot more in the future, and it's currently trading at $1,090 a share, do you think I mind owning it at $1,080 a share? Certainly not. And it looks like I'm getting paid about $82, $83 a share simply for agreeing to buy Tesla for a $10 discount. That is approximately an 8% return for the month. And what's the worst thing that'll happen to me is I'm going to own Tesla for $1,080. But again, I've done my homework. I've done my analysis. I think it'll be worth a lot more in the future. So I'm more than happy to make this trade. So I'm going to go ahead and make this trade. So I'm going to sell 1, do a market order here. And there we go. Trade is executed. Okay. Let's see how much we got paid on that trade. All right, let's go here, orders and trades, and there's the Tesla trade. And it looks like we made $7,855. Looks like the pricing went down a little bit since we bought it. That means the stock price rose slightly while we were talking about making the trade. But think about it, I got paid $7,855 US simply for agreeing to buy 100 shares in a company, Tesla, that I would have bought anyways at its current price, that I think will be worth more in the future. This is how we do each and every trade here at Theta. Now, understanding the strategy is one thing. Understanding how to do it efficiently, that is another thing altogether. There is a lot to learn within this strategy. And the reason we stick to the strategy, and specifically the strategy, is because we've tried every strategy that we can think of. And the reason we stick to the strategy is because it gives us the most amount of return for the least amount of time spent and the least amount of stress, okay? I like to sleep well at night. If I know that my worst case scenario is I own Apple, or I own Facebook, or I own Tesla, or some other quality stock that I want to own anyways, at a discount and I got paid a lot of money for it, that allows me to sleep well. It also allows me to generate some pretty good income. So I'm happy to do that, okay? So let's go ahead and make some more trades. Let's take a look at Nike, okay? Here's one, Nike. I think everyone here has heard of Nike, all right? Nike's trading at $170. And we're going to look at Nike and we're going to say, you know what, we're pretty much happy at 170. That's for this 9-day moving average. I'm pretty happy at 170. Okay, so we're going to go ahead and buy Nike right at pretty much the price it's trading at. Okay, so we're going to go December 31st here and we're going to go 170. Okay, now again, think of this. We can either buy Nike today for 170.29 cents. But instead of doing that, we're saying, you know what, we don't really want to buy it. We'll just agree to buy it. If we have to, we're fine with it, but that means we're getting paid for it. So in this situation, it looks like we're getting paid a fair bit of money. We're getting paid between $7.60 and $8.05 a share simply for agreeing to buy Nike. So I'm going to go ahead and sell a naked put, which is when I'm agreeing to buy 100 shares of Nike, okay? And I'm going to do a market order here. And that's it. And then order is through. Perfect. Okay, great. My order went through and I've agreed to buy 100 shares of Nike. Now, some of you guys may be saying, oh, these are expensive stocks. Maybe I can't. I can assure you, when I started building my account, I started building it with nothing. I had no money. I had nothing but student debt. I would highly encourage everyone to focus far more on knowledge than on money. The money comes as a result of the knowledge and application of that knowledge. It's not the other way around. That's why you have professional athletes and lottery winners that statistically go broke very often. It's because they don't understand how money works. Whereas you have wealthy people, if you take away their wealth, they're able to recreate it. And they're able to recreate it because they understand how money works. They understand how to multiply it. That is exactly why we started our company. You know, when I was growing up, I had no financial literacy, no mentors, nothing. It caused a lot of pain in my life growing up. A lack of money, a lack of resources. I want to make sure that I put as many people in a position where they don't have to worry about this thing. And you know, if through knowledge, you can put yourself in that position. So if you've got a busy day job, you've got a family life, you've got a business, you can incorporate this into your lifestyle because it only takes about 30 minutes a day to trade once you understand the mechanics of what you're doing. And then hopefully that nice side income starts building up, right? Until the point one day where you have a lot more choices in life. Maybe you can do what you wanted to do in life. Maybe you can leave your job. Maybe you can start that business you want to start. But the only way to do it is to be able to develop another income stream that can replace perhaps your current income stream. That's exactly what I did at my job. I worked in the financial service industry for about 15 years out of university. And slowly over the years, I took my trading profits slowly as they built up, and I would periodically buy real estate, okay? And then a few years ago, 8 years ago or so, I had a great job, by the way. I had a well-paying job, lots of perks. I had no complaints about the job I had. It was a great job. But I knew there was so much more out there that I could accomplish because the most valuable commodity is time, not money, okay? So I learned to trade, obviously. I started trading in 1998. I kept getting better and better and trying different strategies. Myself and Matthew Todman, we're self-taught. So when you're self-taught, you tend to make a lot of mistakes, unfortunately, right? But in those mistakes, you learn a lot about yourself and you learn a lot about what you like and what you don't like. For us, this strategy has been great. So let's say, for example, as I was building my portfolio, I would take my trading profits periodically. Like I just showed you, I made a few $1,000s just now. And every time that money added up, I'd go buy a piece of real estate if the numbers made sense. And I got to the point where I had about a dozen properties and I had a pretty good trading account. So I came home one day and told my wife, we had 3 young kids at home. I told them, I said, I'm never in my life going back to work again. And I knew I wouldn't have to, because in my mind, I knew how to make money at that point. I mean, I already had a lot of money by then. So that's a spot we want to put you in. And it's done through knowledge. I cannot emphasize that enough. It's not done through money. It's the other way around, okay? So as you can see here, we've made a few trades. And now we're gonna make another trade. Okay, let's take a look at Palantir. Okay, now this is a company probably a lot of you guys haven't heard of. It's a data security company. We think it's gonna be huge in the future. It only trades at $19.50. Okay, so again, we think it'll be worth more in the future. We're more than happy to own this. Okay, so we're gonna agree to buy Palantir at $19. Okay, so it's trading at 19.5. We're gonna agree to buy it for 19. Okay, as you can see, for agreeing to buy it for 19, we're being paid about $1.02 to $1.07 a share. Pretty good. That means we're making over 5% for 1 month simply for agreeing to buy Palantir. Now, can Palantir go lower? Sure it can. But at least we got a nice discount now, right? Not only do we get the 50-cent discount because we don't have to worry about buying it until 19, we also got another $1 plus on top of that. So our real cost, if we wind up buying it, is around $18. Now, if we think it's going to be worth a lot more in the future, that's a pretty good deal for us, right? And again, that is the backbone behind our strategy. Investing in high quality stocks that we think will be worth more in the future. So I'm going to go ahead and do this trade. I'm going to do 2 contracts, which means I'm going to agree to buy 200 shares, which means I'm on the hook for $3,800. Okay, $3,800. Not bad. But let's see how much I got paid for agreeing to buy $3,800 of Palantir stock. Okay, so let's go to our orders and trades. And there it is. It looks like I got paid $204. $204. Think of that. For 1 month. Just for agreeing to buy a stock that I would have bought anyways at a 50-cent discount, which is about 2.5% discount. So a very nice discount from its current price. Now you may be asking yourself, well, what happens if I wind up owning the stock? That's going to happen frequently. Of course, absolutely it's going to happen frequently. Let's take a look, okay? So let's take a look at Facebook. Facebook's a stock that's really gone the wrong direction of late. And that's fine. Stocks do that from time to time. Now we can see here, looks like I wound up buying Facebook. As you guys can see under my position tab here, you can see it looks like I wound up buying Facebook at $322.90. Okay, and it's only at $309.95. So I wound up buying it for $322.90. That doesn't count the amount of money I got from my put premiums. Okay, it just means my price was $322.90. Okay, all right. Now I turn around and say to myself, you know what? I wouldn't mind getting rid of my Facebook shares for, let's call it 330. I'm gonna take a look at my chart here. Yeah, I'd be happy to get rid of it for $330 here, okay? So, and that's a lot more than I paid for it, and I'm not even counting the premiums I've received. So I'm gonna go to December 31st here, and I'm gonna see what I get paid if I agree to sell my Facebook shares for $20 more than they are currently trading for. Wow, look at that. It looks like I'm getting paid about $5.65 to $5.80 a share. That's about another, call it 1.7% return for 30 days. So I'm going to get paid a lot of money simply now for agreeing to sell my Facebook shares. Remember, I only bought them for $322, and I probably got paid $10, $11, $12 a share to buy them. I'm not even counting them. But let's say I bought them for $322, which is what I did. And now I'm turning around saying, you know what? I'm happy to sell my shares for $330 in the next month. If that happens to be the case, great. If not, no problem. But I get to keep this premium no matter what happens. So I'm agreeing to sell my Facebook shares for $330. Now, if it goes above $330, I'll have to sell my shares for $330. That's fine. If it doesn't go below if it doesn't go above $330, well, great. I get to keep my shares. But I get to keep this $5.60 a share no matter what happens, okay? So even if my shares go away, I'm actually getting $330 plus the $5.60. So I'm getting more like $335.06. So what I'm trying to show you is in this example, even though Facebook went the wrong direction, I was still able to make a lot of money on this trade, okay? So I'm gonna go ahead and do this trade. Now, I'm gonna agree to sell 100 of my Facebook shares for $330 on or before December 31st of 2021. Bam, done. And let's see what I got paid on that. So I'm gonna go back onto my screen here, orders and trades, and my Facebook call. It looks like I got paid $560. Now think of that. I got paid $560 just for agreeing to sell my Facebook shares for about $7.10 more than I paid for them. And that is not counting the amount of premiums I got when I agreed to buy them the first time. This is just to show you what happens if a trade doesn't go our way. It happens all the time, right? But the reason we sleep so well at night is because our worst case scenario is that we own Facebook. Okay, we're okay with that. We think it'll be worth more in the future. But even then, we can still make money by agreeing to sell our shares for a profit, right? I'll show you here. Let's go to another stock here. Let's go to Nike. It looks like I have 700 shares of Nike here in this account, okay? Take a look at my average price. My average price on this one is only $148.70. So looks like I made a few dollars on the stock. And I said to myself, you know what? I'd be happy to get rid of my Nike shares for, let's see here, my chart. I'd be happy to give them for about 175, 176, okay? So again, I'm gonna agree to sell my Nike shares for this month, just for the end of the month, or I might even go to January. Okay, so let's see if I go to January, or let's say if I go to December. I'm gonna agree to sell them for 175. As you can see, it's currently trading at 170. Well, wow. Looks like I'm getting paid a lot of money. I'm getting paid about $5.45 to $5.90 a share, just for agreeing to sell my Nike shares for 175. I only paid 140, whatever it was, 144, 148 for it. And that's not counting the premiums that I got when I agreed to buy Nike. Now I'm just agreeing to sell my Nike shares for profit. On the market paying another, call it near $5.50 a share. You guys tell me, is that a good deal? Would you take that deal? Is that a level of comfort you'd be okay with? For me, it's something I'm more than happy to take. If I can get paid a lot of money simply to agree to buy and sell the shares that I would be buying and selling anyways, well, that's great. So I'm going to go ahead and agree to sell 2 covered calls, which is I'm going to agree to sell 200 of my 700 Nike shares for $175 on or before December 31st. Now, again, if Nike doesn't go to $175, I get to keep my shares. And I can do this again in January and then again in February and so on and so forth. Now, if Nike does go above 175, no problem. I have to sell my shares for 175. But in either scenario, I get to keep this $5.40 a share. That's a good spot for me to be in. So I'm going to go ahead and do this trade. And there we go. And trade is not quite done yet. I don't know why. Sometimes with simulated trading, it just takes a minute or two to go through. So let's see if the trade went through. Oh, there it is. Nike, there it is. Oh, no, only one of them went through. Still sitting there. For some reason, it's still sitting there. It should go through any second. When you do a market orders go away pretty much instantaneously. You can see those 2 numbers at the top, $5.40, $5.75. That is a virtual haggling process. It's a virtual negotiation that's going on electronically. Somebody is saying, hey, you know what? I want $5.40 for this call. And the person selling it saying, you know what? I want $5.75. And you kind of have to agree to a number virtually. However, when you do a market order, you're saying whatever price someone's willing to pay me, I'll accept. And that's why I'm doing that on a practice account or a paper trading account, is because the money is not real. So it's not really important. But I would never do this in a real trading account, okay? So it looks like this trade did go through. And I agreed to sell 200 of my Nike shares for $175. Look how much I got paid, guys. I got paid $1,080 US. Now think of that. If you have a business, a job, and you can simply do a trade like this during your daytime, is that going to be an extra income source for you over time? I would think the answer would be yes. Hopefully, that income over time can lead you to a better spot. And for me, it was purchasing real estate and building my trading accounts and then being able to quit my job. So the point is, you can make a lot of money simply for agreeing to buy and sell shares that you would be buying and selling anyways. And this income can really change your life. As you can see, some of these returns are pretty good, right? So I'm going to go ahead and do some more trades. Let's take a look at, and do the pounds here. We can do all PayPal. Here's a good one. Okay, so we're going to agree to buy some more PayPal. PayPal's been not doing well of late, but that's fine. It is still a great long-term business. Well, actually, it's below its 200-day moving average. I'm going to leave PayPal alone. And we're going to go to, let's try Visa here. Visa is a little bit too hot today. Let's see where else we can do a trade. Now, these are all the thought process you go through when you're making trades on a daily basis. What stocks do I want to trade? What looks good today? Right? There's a certain pattern to the market. It's called seasonality. And seasonality is very, very important. The reason seasonality is so important is because certain times of the year stocks do really well, and certain times of the year they don't do as well. They're more flattish. So the times of the year that do well, which is from October to May, the time frame that we're in now, we generally tend to be a bit more aggressive. And then from May to October, we tend to be less aggressive, okay? So here's a stock I'd like to be picking up. Here's one, Airbnb, okay? So I'm gonna go ahead and do this Airbnb trade. I'm gonna do it right at 162.5 because I want to own some of this Airbnb because I think the world will open up again. Again, I think this company is very well positioned in the future to take advantage of people deciding to live and work a different spot than they live, okay? Because now a lot of us can work remotely, and this will be an ever-growing theme in the future, in our opinion. Again, we've done our homework on this, not meant to be stock advice. For various reasons, we think Airbnb will be worth more in the future, okay? So now we know that, all right? So we say, in our head, we say, okay, Airbnb, we think will be worth more in the future. Okay, great. Again, Airbnb is trading at $164.84. We're gonna go and say, you know what? We're happy to buy Airbnb for $160 on or before December 31st of this year. So I'm gonna go ahead and do that trade. So I'm gonna go to sell. I'm gonna do quantity 1. I'm gonna agree to buy 100 shares and bam, okay. Trade should have gone through. Oh, still pending. Again, just like last time, it will go through any second now. So we're gonna go back to our orders and trades tab here, and there it is, the Airbnb trade just went through. So there we go. So we got paid $815, okay? Again, $815. That's $8.15 a share. That's just over a 5% return for less than 1 month, simply for agreeing to buy Airbnb for a $5 discount approximately. What do you guys think? Does that sound like a good deal to you or a bad deal? Would you rather buy Airbnb for $165? Or would you rather agree to buy it for $160 and get paid over $8 a share? Which one do you think sounds better? You know, for us, we're more than happy to get paid to agree to buy shares in companies we want to buy. Okay? All right. Let's see if there's some more trades that we can make here. Again, we don't try to force trades. If the market's not giving us a good trade, we'll wait. We'll be patient. We'll wait till the next day. Okay? So let's go into our watch list and see what all the stocks are doing today. All of our stocks anyways. Make one more trade here. Let's go with AMD, excellent company, Advanced Micro Devices, okay? As a chip manufacturer, you know, we think the world will be more and more connected through connected devices, through connected vehicles, electric cars, which are becoming more and more prevalent, use far more chips. As you can see, AMD is a company that is going to be very well positioned to benefit from this and upcoming things like such as the metaverse. Again, that's not meant to be stock advice. It's simply showing you our internal process. We've done our homework. We think this company will be worth a lot more in the future. We've done our analysis, okay? And we constantly do this analysis. So AMD is trading for $148.66, okay? All right. So I say to myself, you know what? I'd be happy to buy some Airbnb. This time I'm gonna go for a little bit of a discount, okay? I'm gonna agree to buy Airbnb for, you know, call it 135 bucks. That's a long ways away from where it is today, okay? Agreed, it's pretty far away. So again, I'm gonna go into my options chain. And I'm just showing you that you can go further away, but you'll get paid less, but you can still make a lot of money. So I'm agreeing to buy Airbnb, okay? AMD, excuse me, for $135 for the next month, okay? But look at that. The market is still paying me $3.80 to $3.90 a share. That's just shy of 3%. So I'm getting paid almost 3% to agree to buy AMD for a $14 discount, almost a $14 discount. 3% for a month for agreeing to buy AMD for almost a $14 discount, a company that I think will be worth more in the future. So you can toggle your risk up and down according to your level of risk, looking what you're getting out of it, right? Now we're going to teach all this stuff to you in the course about, when, how you can be more aggressive, less aggressive. Now again, AMD is trading for $148. I can agree to buy AMD right at $148. You can see I'm getting paid almost $9 a share. But if I go all the way down to 135, I'm only getting paid about, just shy of $4 a share. So I'm getting paid far more at 148 than I am at 135, which makes sense because there's a big buffer between 148 and 35. But it shows you that even if we agree to buy our shares for a lot lower than they're trading for, we can still make some pretty good money. And what's the worst thing that's going to happen to me here? The worst thing is if I agree to buy AMD at 135, which I'm going to do, okay? The worst thing that's going to happen to me is AMD will go down in price to 135, in which case I'll have to buy it. But again, I'm more than happy to buy it. So I'm going to do 2 contracts here, which I'm going to agree to buy 200 shares of AMD. I'm going to do a market order here. And I'm agreeing to buy AMD for a $14 discount, roughly. Pretty good deal, actually, more than $13.59. That's the discount I'm getting on this. So let's see how much I got paid on that trade. Let's go to this AMD trade here, orders and trades. We're going to AMD. It looks like, it went in 2 separate orders. So I got paid $380 on both of them. 380 times 2. I got paid $760 US just for agreeing to buy AMD. Think of that. I got paid a lot of money simply for agreeing to buy a stock that I would have bought anyways. Okay. Do you guys see how powerful this can be? I showed you how I got paid for agreeing to buy stocks I wanted to buy. I also showed you what happens if that stock happened to go in the wrong direction, like Facebook did. And then I agreed to sell my stock for a certain profit. And I got paid again for that. Do you understand how much income we can generate doing this and how forgiving the strategy is? The strategy can be very forgiving because as long as you're not leveraging yourself, you're putting yourself in a position where the worst case scenario is that you own a stock that you wanted to own anyways. And you got paid a lot of money for it. And you got a discount on it. To me, that's a great spot to be in. I'll take that deal all day long. And that is what we do each and every day here. Okay? So think of the amount of money I made. And I know this requires a lot of money to make this. I get that part. And again, I started off with nothing, 0. So I understand it takes a lot of money to make that much money, the money that we made today. But like I said, there are cheaper price stocks. There are many cheaper price stocks, which if you say to yourself, you know what, I really like this company. I'd be happy to own this company. That's the one thing we will never compromise. We never will compromise on the quality of the companies we are agreeing to buy. Without that, we have nothing. The greatest investors in the world all do the same thing. They invest in high quality businesses. That's it. Ultimately, that's what determines everyone's success. We simply use options to generate income and enhance our returns. Okay? So we invest like many of the great investors out there. The only difference, like I said, is we use options on top of that to give us the additional return we're looking for and to lower our downside risk. I hope you guys understand why we're able to lower our downside risk. Okay. Now let's take a look at Visa here. Another stock that's been hammered pretty good of late. It looks like I wound up picking Visa up here at $212. It's at $197. Not good. But again, that happens. Now, let's say I got paid, I don't know, that's $8 a share. So on my 212, my real cost will be about 204, that means. But I'm not going to worry about that. I'm going to say, you know what, 100, and that's not counting all the time that, let's say that those puts expired worthless, which happens most often. In this particular example, I wound up buying 400 shares of Visa at an average cost of $212, okay? So I say to myself, you know what, I want to get at least $212 a share. So I'm going to agree to sell my Visa shares for $215 on or before December 15th, okay? Or let's go to January here instead. Let's go to January 21st. Normally, we don't go past 45 days. There's a very specific reason for that. But we're going to go a little bit further out here, okay? So we're going to do $215, okay? As you can see here, we're getting paid about $3 a share, okay? So again, that's a long ways from where the price is today. So even though Visa went the wrong direction, we were still able to make a lot of money, okay? So I'm going to go ahead and do this trade. I'm going to agree to sell 200 of my 400 Visa shares for $255 on or before January 22nd. I'm happy to get rid of them. I only paid $212, and I got paid a lot of money for those. So I'm happy to get rid of my shares for $215. I'm not saying that is a normal thought process. I'm just saying that can be a thought process. If you say to yourself, you know what, I'm happy to get rid of my Visa shares or whatever shares they happen to be, you can again do a covered call simply to get rid of those shares. So again, I hope you guys understand how powerful the strategy can be, how much income you can generate from it, and how it also allows us to sleep all night. Stocks go down temporarily. Of course they do. It doesn't mean the company sucks. It just means the stock is down. It could be for a variety of reasons. COVID, could be because the humans are in a bad mood. It could be a whole bunch of things. It doesn't change the amount of money a company is making, most likely, right? Just because, I'll give you an example of Tesla. Just because inflation is higher than people thought and interest rates may go up faster, does that mean Tesla's selling less cars? I don't think so. We can clearly see the transition to electric vehicles underway. So sometimes the stock price doesn't necessarily reflect what the company itself is doing, but therein lies the opportunity. If the worst thing that's going to happen to us is we're going to own some shares in these companies, well, if we don't mind, it's a pretty good spot to be in, no? Because again, we think they'll be worth a lot more in the future. Our first job here at Theta is and will always be the same as Warren Buffett. Rule number one, do not lose your money. How do we do that? By putting ourselves in a worst case situation of owning high quality stock. Rule number two, don't forget rule number one. That's it. It's that simple. And we're able to generate a lot of money, a lot of monthly income and returns simply by what I've showed you guys, not violating these rules, okay? And this is what we do day in and day out. Now, what I've showed you here is a very simplistic way to do things. There is a lot to learn within the strategy, okay? So for example, just simply, you must be wondering, why are some stocks like Tesla paying so much more than another stock? Let's say like Apple. Why is Tesla paying so much more than Apple? Well, this is the concept of volatility. So what I'm getting at, there is many things to learn within this one strategy, okay? So if you take the time to learn how this works and understand the details, understand the intricacies, and I can assure you, it doesn't matter what your background is. It doesn't matter if you went to school, didn't go to school, background in finance, stock market or not, it doesn't matter. We teach people right from the beginning as we would have wanted. We designed this course to be what myself and Matthew would have wanted back in '98 when we first started trading. We had no idea what we were doing. That is how we designed this company and this course. It's really for the novice investor who's looking to manage their own money or learn more about the markets and democratize what has been an area where professionals have managed money for us. But the unfortunate part is 86% of those professionals, mutual fund managers, 86% don't even do as good as the overall market. So you have to ask yourself, what are you paying so much money for? But if you can trade on your own in 30 minutes a day and be able to develop another income stream, think of all the possibilities that could open up for you and your family. That's the spot we want to put you in. And that's why we started this company. It's a personal issue for us, and we will continue to do so. And I hope you guys can clearly see why we believe the strategy is very effective over a long period of time, okay? Now, over a long period of time, I just want to show you something here. Like, let's take a look at a long period of time. Let's take a look at 5-year charts on some of these companies. Take a look at Facebook. So we're going to go to 5-year chart here. Notice the pattern, how this company is done in 5 years? You know, pretty good. You're seeing all these squiggly lines. You're like, but generally speaking, you can tell the trend is upwards. 5 years ago, Facebook was at $120 a share, okay, $118 a share. Now Facebook is at $330 a share. Okay, 308. Sorry, excuse me. It's gone up considerably. Why has it gone up considerably? Well, let's take a look at the financial statements. This is the things that we talk about during the course. Okay, so we're going to look at the financial statements. You can see here it is. They're making more and more money every year. Clear trend there. You can see here 2017, 2018. Let me see if I can get this to click. There we go. Yeah, 2017, 2018. I can get this to click 2020. You can see they're making more and more money every year. And you can see right now in this current year, we're trailing 12 months, 112 billion. 2016, only 27 billion. Clear trend, huh? And you can see that's just revenue. You can see again the amount of profit they make, okay? What we're saying to you is we do the homework on the companies first. We evaluate whether we think it's a great long-term company to own. Once we've decided that, then instead of buying that stock, we use options to enhance our return and lower our risk. It's a really good spot to be in. If all else fails, like it did last year during COVID, COVID came out of the blue, and who would have guessed? And the stock market goes down by 35%. Well, the worst thing that happened to us is we owned our shares. Okay, so let's take a look at that. Let's take a look at a 2-year chart on Apple. Okay, so that would encompass COVID. You can see here, everything is going fine with Apple. It's going here. It's about $80 a share just before COVID. And then bam, goes down to 57 bucks. Just got creamed. But because it was a high quality company that continually made more money, look what happened. And the world became a lot more connected. Where are we today? 160. Double where we were before the virus. Okay. Same thing with Facebook. Look at a 2-year chart here, same thing. Okay. You can see pre-pandemic, it was going around here at $210. It got absolutely crushed. But because our worst case situation was that we owned the Facebook, we were able to wait it out and wait for this eventual recovery. Okay. Because why? What is our first goal? Not to lose our money, to sleep well at night. These are our goals, right? And I can do this for a lot of different companies and so on and so forth. That's the exact point. You want to leave yourself in a position where the worst case scenario is that you own that stock, you have not lost your money permanently. Permanent loss of capital is a bad spot to be in. That is not the spot we want to put ourselves in, okay? All right. I think that's it for demonstration for me, Christine. Do we have any questions?
Yeah, we have a couple of great questions.
I wish we had, too bad we had that issue with the attendees. I apologize, guys. There's probably be a lot more people on this call, but because the link was incorrect, unfortunately, but we're more than happy that you guys were able to join us. So please, I'd love to answer some questions.
Right. Okay. So the first question, how do you get in and out quickly? In other words, taking the option premium and somehow dumping the requirement of purchasing the shares upon expiry?
I don't understand the question, quite frankly. How do you get in and out quickly? We don't get in and out quickly. We just simply agree to buy shares in companies we want to buy. Let's say Apple. We get paid money for it up front, and then we either have to buy Apple or we don't. We have to have the money to buy Apple in the account to begin with, though. Is that what you're referring to, ML? If you could just verify if that's what you're referring to. So if I'm agreeing to buy 100 shares of Apple, I would make sure the money's in my account prior to doing so. But you clearly see I can generate a lot of money then, right? So let me know if that's what if you were looking for. If not, I'd be happy to clarify, okay?
Okay, and we have another question from Jeremy. Do you only do market orders on paper trading accounts and limit orders on real money accounts?
Yeah, pretty much, because paper trading has delayed data. So I just do market orders. I'm trying to get the mechanics and just trying to show you guys the mechanics. But yes, on a real account, I would only do a limit order. Now, market order, again, is where you just say, you know what, I'm happy to take whatever someone's willing to offer me. And that's okay when the money's not real. But when the money is real, you want to do a better negotiation, because that negotiation can cost you a lot of money, or lack of negotiation can cost you a lot of money. So absolutely, yeah, absolutely limit orders on real accounts, yeah.
Great. And a question from Gabe. How much money should we start with? Good question.
Gabe, I would start with zero. I would just practice trade. When I started with no money. I had a bunch of student loans. So I know exactly what it's like to start with nothing. Money is not built up because of money. Money is built up because of knowledge and experience. Focus on getting the knowledge and experience, and add money as you grow comfortable. You only need to start off with a few $1,000s to begin with, but you add to that as over time. As you're making more money, as your level of comfort increases, as your level of knowledge, your experience increases, you're like, hey, I get this. I can do this for the rest of my life. That's when you start ratcheting up that money, because the money will be simply a byproduct of knowledge. It's not the other way around. People get so confused about this in terms of, money is simply a byproduct of knowledge. It's not the other way around. I can't stress this enough. I'm a big sports fan. I have Raptors season tickets, and I love sports. I love watching it. It always amazes me how professional athletes, manage to make sometimes hundreds of millions of dollars and wind up going broke. And you think about it, you're like, how is that possible? How do you even do that? Like, how does a guy like Allen Iverson make $300 million and go broke? Well, it's because the lack of literacy, which they came in, they don't have financial literacy to begin with. So it doesn't matter what amount of money you give them, they're going to lose it. But once someone understands how money works, understands the intricacies, then they're going to be able to grow it. So I would say, Gabe, really, really focus on the knowledge, but you only need a few $1,000s to start with. But focus on the knowledge. The money will come after the knowledge, okay?
Great. Thanks, Omar. I'm still thinking a little bit about L&M's question about getting in and out, and I'm wondering if what he's getting at is, or she's getting at, is maybe the strike date and part of the strategy of when you choose to place your options trades.
Yeah, so the question is, suppose I want to purchase one contract. We're not purchasing one contract, we are selling one contract, okay? So when you sell one contract, you are agreeing to buy 100 shares of company X, okay? And then you take the premium, okay? And that's called selling a naked put or writing a naked put. Writing and selling are synonymous, okay? My question from before is this: is there a way to keep the premium? Well, we keep the premium no matter what happens, but sell the shares with a put prior to the expiry. This is the part of your question which I think maybe perhaps is a bit confusing. We don't sell the shares. We're just simply waiting for the shares to be assigned to us, meaning we'll have to buy them or we won't have to buy them. We're not selling any shares because we don't own any shares yet. We will only have to own the shares if the price goes below the price we agreed to buy it for. So we're not selling shares. I'm not sure if you understand what I'm talking about at all, but if that clarified it for you. So we normally wouldn't agree to more than 45 days at the expiry that you're looking at as 12/31, which was New Year's Eve. Normally it would be 30 days and there's a very specific reason for that, okay? But again, just to reiterate the process, we sell a contract, which means we're obligating ourselves to buy 100 shares in our company if we're doing one contract, okay? Then we wait for the date to come. Either it happens or it doesn't happen. Now, if it goes down, we'll have to buy it. Now, your question is, I understand I have the obligation of the price to go down. Is there a way to exit the possible obligation prior to the expiry date? Of course. Okay. So here, that is a good question. And we do this all the time. Now, that's a great question. So you can see here this Apple put, okay? Here's an Apple put. I agreed to buy it on or before December 3rd, which is tomorrow, okay? I got paid $2.49 a share. Now, clearly, the odds of it going to 147 by tomorrow are very, very slim. So I'm going to go ahead and buy this back. We do this all the time. We buy back our puts, locking in our profit, and no longer having to worry about buying the shares. So that we do all the time. So absolutely, you can do that. And we do that all the time. And I'll do it right here. So again, I went and go ahead and bought this back. And now I no longer have to worry about buying Apple at that price. And that's actually why I have this column here where it's the unrealized P&L. Generally, when it gets to about 80% of the value of my put has decayed or expired, I'm more than happy to go ahead and buy it back, okay? So for example, the Tesla put. Well, I got $52 a share on it, okay? But it expires tomorrow at $1,000. So it's pretty low likelihood that I'm gonna have to buy it. That's why it's only worth $300 right now, 307. So again, I can go ahead and buy this back, and I normally would, but this is a practice trading account, so I don't look at this every day. And I just go ahead and buy this back, and I don't have to worry about buying Tesla at that price anymore. Now I can use that money for something else altogether. But every time you make a trade, when you make the trade from the beginning, you should be happy to own the stock if need be. If you did not meet that, then the trade might not have been for you. Because remember, you can make money even if you own the stock. We've already gone over that. That's called a covered call. But absolutely, we buy these back all the time. So for example, the reason we make money is this concept of theta. Simply because time is passing, the value of our options are decaying every single day. Now, I'm going to show you right here at the top. You see where it says theta? Right there at the top, $1,888. It's just constantly changing. That is the value that my options are declining in value. So as long as time is passing, I'm making $1,889 on this account simply because time is passing. I know it's a weird concept, but think about it this way. I agreed to buy, let's say, Apple for 31 days. Let's say in 30 days, the stock didn't go anywhere. There's only 1 day left. You think the value of the option is still going to be $5? No, it might be a few cents because there's only 1 day left. So this is great for us. We make money simply because time is passing. Okay. It's a bit of a tough thing to get a handle on. So Sam P asks, when you sell out of the money call options, what happens? When you sell out of the money put options, what happens? Well, when you sell out of the money put options, either the price goes to your price or it doesn't, and you're assigned, which means you have to buy the stock or not. That's when you sell a put option. When you sell a call option, and let's say it's a covered call, which means you already own the stock, right? You already own the stock, you're simply agreeing to sell your shares at a certain profit. You can see here, I did that with Tesla here. I agreed to sell my Tesla shares for $1,230 on or before December 17th. And I got paid $33.89 a share. So that's what happens. On the call side, we're agreeing to sell our shares for a profit and getting paid for that. And on the put side, out of the money on both, we're agreeing to buy our shares for a certain price and we're getting paid for that. Okay. And the worst case that happens to us in our strategy is either we'll have to buy the stock if it's a put, or we'll have to sell our stock if it's a call and it gets called away. It's a good spot to be in. ML, I understand I have the obligation. Okay, so we answered that question, ML, great. Jeremy, do you write a covered call immediately after assignment? No, absolutely not. We use a lot of different things to make our decision. One of them is seasonality, looking at charts. So no, absolutely not. Otherwise, there's no thought process. You're simply agreeing to buy a stock and then agreeing to sell it right away. That's not what we do. Oftentimes, you can make tons of money on stock price appreciation. So do you want to sell a covered call right away? No, and that's not what we do. We do sell covered calls. Like I said, for example, from October to May, the markets do pretty well. So we're much more likely not to write covered calls now because there's so much upward pressure on the market. The markets generally tend to do well. So we don't want to sell our shares. We'd rather have them go up in value and make money that way. Remember, we can make money in a multitude of different ways. The cool thing is the worst that happens to us is that we own these shares. That's a good spot to be in. Why? It allows us to sleep all night. You know, this is a good spot to be in. And also, got it. Is there a name for this technique? Yes, it's called a naked put. The naked put is the name for this. If you guys want to visit our YouTube channel, I've done lots of videos on trades, different scenarios, covered calls, volatility. I've done lots of videos on these. If it's something that you're interested in looking more in, but I can tell you, just from my viewpoint, guys, it's absolutely changed my life. If I hadn't figured this out, I don't know where I would be this day. You know, I'd probably still be at a job. Not that there's anything wrong with the job. I'm not putting down jobs or honest living, not whatsoever, not at all, right? All I'm simply saying is this has opened up so many more doors for me and my family. I can do whatever I want for the rest of my life. You know, I'm not that old. I'm not super old. You know, it's a really good spot to be in because, you know, when I was, you know, we had 3 young kids at home. You start feeling you're like, oh my God, am I going to be stuck in this job forever? I have 3 kids and so much obligation. I get it. Trust me, I've been there. And you start thinking, maybe I have to do this job for the rest of my life. Or what other choice do I have? And I didn't want to do that. I didn't want to be in that spot. I really wanted to be in a spot where I got to do what I want to do. You know, there's an old saying, you can either live with discipline or you can live with regret, but you're going to live with one of them. And I decided to do what I want to do. So again, like I said, I just kept making these premiums year after year after year. You know, I showed you guys how much premium I generated just today. I would take that premium and I would buy more stock, or I would buy real estate if a good deal came up. And eventually I was able to buy my freedom, buy my autonomy, do what I want to do in life. And like I said, now I have enough assets and knowledge where I never have to do anything for the rest of my life ever again. And that's a really good spot to be. Not that I will do that because I love what I do, but It's really good knowing you don't have to do it. You're doing something because you truly like to do it, not because you have to do it. And that's the spot we really want to take everyone in. That's the whole point of this thing. That's the whole reason we created this company, is to get as many people into a position of financial independence. Why? Because we weren't in that position. We know what sort of issues it caused in our lives. So we want to get as many people to that as possible. And we do things like, for example, we have Theta Kids, which, for our members, that's something we're going to educate the next generation. My kids are 15, 12, and 10 now, or 15, 13, 11. So, I don't want my kids growing up the way I did, where I had no idea what was happening when I went to university. I was totally clueless. I got a credit card my first day and I blew it and destroyed my credit. I don't want my kids going through this. So all Theta members are going to educate their kids on basic financial literacy and prepare them for life. Again, because think of financial illiteracy, all the problems it causes in society, between mental health issues, number one cause of divorce. You would think that something that causes so many problems would have more attention and focus in society, but it doesn't. But that's why we created this company. So I hope you guys enjoyed the presentation, and I hope you see how impactful this can be if you make it a part of your life, how it can absolutely change your life and perhaps give you the freedom and autonomy to do what you want each and every day. That's the spot to be in, okay? Any other questions, Christine?
Yeah, there was a question from Jeremy that I want to be sure to answer. He's asking, do you dedicate a percentage of your portfolio to cash reserves?
That's a good question, Jeremy. I do when the markets are not as strong, from October to May. I mean, from May to October. But more importantly, what I did over a period of time is I built up a nice real estate portfolio, which I have accessible lines of credit. So every time the market kind of hits a bit of a dump, I'm able to pull assets away from there and use it for here. Now that won't happen on day one. So for your day one question, I use seasonality. So depending on how statistically well the stock market does certain months, I'll be more or less aggressive based upon that. So absolutely, it's not a percentage, like an everyday percentage. It literally varies month to month, significantly in fact. So good question though. But over a period of time, I'd encourage you to be able to develop another asset category which you can draw from time to time. That's a good spot to be in, because like let's say last year the market goes down by 35%. We know it's not going to stay there, right? The markets have always recovered historically, and it did this time as well. But if you have all these other assets, maybe real estate assets that you can draw from, because from time to time the stock market will present you with tremendous opportunity. You're like, wow, what a bargain the stock is, but you don't have any money to take advantage of it. When you have another asset category like real estate, you'll be able to take advantage of it as long as you know what you're looking for. Okay? So I hope that answers your question, Jeremy. I'm looking forward to teaching you. So thank you for signing up. I have a feeling you're going to look back one day and it might be one of the best moves you ever made. So I know it's a lot of confidence on my part, but I know what it's done for my life and a lot of other people. So I'm really looking forward to teaching you. Okay, Christine, do you have any other questions?
No, I think we've answered all the questions in the chat. Thank you very, very much, Omar. Always a
All
great
right,
presentation.
All right, guys. If anyone has any other questions or has any, want to contact me for any reason, I'll send my email address here. It is Omar. I'll just type it in here. At Theta, okay, THETA, tradingco.com. Okay, so Omar at ThetaTradingCo.com. If anyone has any questions, anything, I'm more than happy to answer. We are very transparent here at Theta. We all do the same things each and every day, and we've built a really good community of 1,400 people, and we hope that you become part of our community and grow with us over the years. We started this company 2 years ago with the sole mission of getting people, as many people as we can, to a position of financial literacy and independence. And that's what we will continue to do. So we would love to have as many people in our community as possible. We have our first live event, by the way, coming up this Saturday. If anyone's interested, it's going to be in Mississauga, Ontario. And we do these annual events. Again, COVID really caused a crimp in that, but we're back to doing these live events. So again, a lot of good things going on at Theta. And I encourage you to not only check out our reviews, check out our community and see if it's right for you, okay? All right, Christine, thank you so much. And guys, thank you so much for your time and attention. I greatly appreciate it. I hope you learned something new. And for those of you who will be in Theta, I'm really looking forward to teaching you, okay?
Great. Thank you very much, Omar. Thank you very much for everybody who's joined us. By all means, please keep in touch, reach out to us, check out our website. Look forward to hearing from you in the future. Have a great day, everybody. Thank
Thanks,
you.
guys. Bye-bye.